All right, we are live. Let's talk markets live on this beautiful March 21st. I don't know how it is by you guys, but the weather has just been spectacular
Gorgeous.
up here for the 2 days this week I've been here. I was in DC Monday through Wednesday, where the weather was even nicer. But not going to say what the climate was, but the weather there was quite nice. Um, so, it's I'm excited to jump back on with George and Dennis and to talk markets on Let's Talk Markets. But I do want to start out the show by announcing a very exciting milestone that Irvin has just reached, where we have yesterday announced our first public company client joined our platform in order to connect with their investors. Their name is Monogram Technologies, MGRM. I don't know if you guys are familiar with them. Pretty cool story stock, amongst other things. One of the largest crowdfunding, I think, offerings that there were. Tens of thousands of directly registered individual investors, and really compelling technology. I'm not here to sell it. I'm just excited that they really want to connect with their investors, and they joined Irvin to do so. And so it's been a real great success so far in just a couple of days. So it's a real milestone for us. Dennis, I think you've hit a milestone this week too. So
Yeah,
you
we're
want to
trying to do
talk
some
about
stuff.
that?
Well, first, congratulations, Dave. I mean,
Thank you.
I've
Yeah,
known Dave for probably almost 15 years here now.
a
We've
while
run
now. Yeah.
through market structure conversations for years. We've been good friends, obviously, for a very long time. So I love it when you have success. We don't know if we have success yet, but we just launched a new network at stocktradernetwork.com. Where we've got, we're trying to build a community of short-term traders and long-term investors to come in, talk their ideas, chat amongst ourselves. Obviously, we've always had a good community for pre-market prep, our regular show that we still do 8 to 9 every day. You can watch that on Stock Trader Network as well. And then if you want to expand further, we've got a 24/7 chat. We've got educational resources. We're trying to be the one-stop shop for the trader here. It's taking some time to build it up, though. We've been working on it for a long time, and my voice might sound a little bit hoarse because I talked for 8 hours straight yesterday, and I'm not used to that. So I was joking with George and Dave. We got to get you guys over on the Stock Trader Network. Give my voice a rest here for a few minutes there. So yeah, that's my story. So stocktradernetwork.com. So trying new
Awesome.
things.
Yeah, that's what else is there, right? You always got to try something new. Um, so yeah, George, Dennis, thanks for joining us. Pretty excited to talk with you guys. It's been what, 2 months, I think, and I don't know, has much happened in the last 2 months?
No,
It's
nothing.
nothing, right? It's
No,
been
Uninteresting.
quiet.
totally uninteresting.
It's
um,
totally uninteresting.
yeah, and I was telling the guys earlier, I was actually in DC this week, meeting with the SEC. So we, the investors, last week petitioned the SEC for rulemaking on Reg Show, the regulation that governs short selling, and we're pushing to close all of the loopholes in that regulation, including the Madoff exemption for market makers, the problem of continuous and persistent failures to deliver, where we're arguing for escalating fines for FTDs, and getting rid of basically the subjectivity of Reg Show. And the same thing is actually happening up here in Canada. There's an effort to do similar rules around Reg Show, and we're going to be pushing to get rid of any subjectivity on those rules as well. So in Reg Show, you have to locate stock before you sell it short, and you have to have what's called reasonable grounds. And if you want to have an exception to that rule, you have to be what's called a bona fide market maker. And those two terms mean nothing. Reasonable grounds means nothing. Bona fide means nothing. These are completely subjective terms. That's why the
Yeah.
regulation is unenforceable. And that's why we are pushing to change it to something objective and enforceable. So, had some time in DC and had some very encouraging meetings down there. But then I'm really happy to get back to Canada, a civilized country that doesn't make trouble with our neighbors
Oh
and just.
no. Yes, not at all. We don't take advantage of the US with our trade surplus. I mean, that probably leads us into this discussion. I mean, jokingly, not much has happened. A lot has happened, obviously. 51st state talk over here, Dave. So you move away from the U.S., you might become an American again by force.
Fled the country, and here they are coming, trying to take me back.
It's your fault. Okay. They don't want you to leave. They want Dave Lauer. They need Dave Lauer, and they're going to take over the whole country to get him.
Just to get me back, yeah. It's not cool, all right? It's not cool. I don't know what's going on. Honestly, like, this whole thing is so crazy to me. And I had the funniest conversations in DC. I got to tell you, and I was talking to someone, and no one was in favor of it. Everyone thinks it's absurd. And he was like, "How do you pick on Canada?" Like, and I was telling him, I was like, Canadians are angry now. Like, they're angry. You've made the nicest people in the world angry. Do you know how hard that is? Like, this is like, I can't even tell you, I'm from Jersey, and I've never apologized so much as when you live in Canada. Everyone's apologizing all the time for everything. Not your fault, their fault, doesn't matter. Constant apologies. It's like the nicest, most polite place, and now all of a sudden they're angry, right? Dennis, are you angry?
Yeah. Yeah, you back us into the corner and we start throwing our maple syrup at you. That's what happens here.
It's gonna get real sticky, guys.
I mean, my wife is petrified. My wife is worried about an imminent invasion happening. I was like, I don't think we're gonna have an imminent invasion, but this economic war is a little bit scary, obviously. You know, so I mean, lots of people obviously talking, you know, in our area about Trump. And, you know, I come from Windsor, Ontario originally, so I have lots of friends back in Windsor. I would say like Windsor is like ground zero for this stuff because of the automotive. Like 90% of the Windsor economy is automotive, big three related. So people are very worried about their jobs down there. You know, they've had jobs for, you know, forever. Like people working 30, 40 years, you know, 35 years at these plants, and they're worried, you know, that, you know, they may lose their jobs. So, I mean, that's the other side of it. And I get where Trump is coming from to a certain extent. You know, you want more things made in the U.S. You obviously want jobs more in the U.S. The one issue that, you know, I think the markets have is that I wonder if he's just trying to do everything too fast and too harshly, like coming in, bulling a China shop. I'm going to make change. I'm going to rip this apart, rip the government apart. I'm going to get rid of all these trade deficits around the world. He's doing so much so fast that I don't even think the market knows what to do with it, especially the U.S. markets. And that's why I think, you know, they've obviously been going down over the course of, you know, the last month or so.
Yeah. What do you think, George?
Yeah, I mean, I think that the major problem here is that this is probably like the worst time post World War II to be, you know, taking on this kind of, I would say, let's call it global acrimony. And like, it kind of reminds me of, you know, I play this very intense strategy game, Europa Universalis. And if you take too much territory, all the people around you form a coalition against you and you lose. Like, these coalitions mean you lose. And that kind of reminds me of what's going on right now, where it's just like, I feel like this would be going a lot better if, you know, the enemies might have been waterfalled a little bit and like picking some battles at a time. Like, and kind of where I started the worst time since, you know, World War II is you look at, you know, our market being down. I looked at this like earlier in the week, our market being down about 6% and China's market being up 26%, right? And I think the horrible timing of this is it seems to be coming at an inflection point where what I would always say is be like, yeah, the US has a lot of problems, but I think they're the best at innovation. And I think we might have, with DeepSeek, I think we might have passed an inflection point where the US might no longer be the best at innovation. And it's not just DeepSeek. It's that, you know, probably like Alibaba, you know, Baidu, they both have like models that are like, you know, at least comparable or coming out there. And
we'll get into electric vehicles in a bit, but the BYD announcement of the battery that can charge in 5 minutes. I mean, incredible advances, right?
Yeah, but it's just like, I look at that and I say, okay, we've really got two problems, right? It's that I think we're taking on too many enemies all at once. And then we also have the situation where there's a legitimate argument that these Chinese companies might be better to put their dollars in. So I think that's the major thing our markets are struggling with, where it's just like, I think a lot of people in Europe would love to move their money elsewhere, to China, wherever, just based on what's going on in our country. But the fact that there seems to be some legitimate reasons for it, I think that's a major problem for us right now.
Yeah, you know, I gotta say that there's a surprising amount of things that Trump says that I find myself agreeing with, and a lot of it is related to, you know, look, I have a very traditional economics education, and that's like sort of this Keynesian type of globalist education that has sort of come crumbling down in the past, I don't know, 10 years. That I think like the economic consensus from 30 years ago is dramatically wrong and has been proven dramatically wrong. And it's all on all of that stuff that I kind of tend to agree with Trump, that you know, these global trade imbalances actually are a problem in some places and in some ways. And this idea that you can stop making stuff as a country is terrible, right? That's a terrible thing that we did to our country over the course of 30 years, and that we need to correct it and fix it. That said, I'm very much sort of in agreement with you, George, that like this is a terrible time to be taking a wrecking ball to the global geopolitical order.
That's what it is.
Given where China is at, right? And so far we are 2 full months into this thing, and you could not have, I don't think you could have done more to help China than what they have done in terms of foreign policy, in terms of the way you've treated your allies. Like, there is a lot to be said for building this massive block of alliances, both militarily and economically, across the globe, to confront what is going to be and what has become a second major superpower. We are out of this unipolar world. We're back into a multipolar world, which I think is actually probably a good thing. But at the same time, you know, we need to be bringing our friends closer and making sure that we're all sort of unified against the, you know, these forces that are going to be coming at us in every way, economically, technologically, politically, militarily. You know, I think that this is just crazy to me, the way that they have approached things with Canada and Mexico, with Europe, compared to, if just look at like tariff rates on Canada versus on China. It was crazy at first that they were so imbalanced, so much more against Canada than China, and even now where it's close to even, that just doesn't make any sense to me. Especially when you consider that the trade deficit to Canada is basically because Canada sells the U.S. oil at a discount, right? That's like the entire deficit is discounted oil.
More. Dave,
Oh,
it's
more
more
than
than the entire deficit, because yeah, it is, because I was reading a TD paper there, and the entire deficit, if you take oil out, US actually has a trade surplus with Canada.
Crazy.
That's the absurdity
crazy,
of
right?
it all.
It's
They
absurd.
actually have and we know it. We buy so many US products. You know, like, we don't produce that much in Canada. The stuff we produce in Canada, for the most part, is stuff that's going back and shipping back to the U.S. to continue to be in production.
Right.
So if you take out the oil, and they have the discounted tariffs on that, only at 10%. If you take out oil, the U.S. has a trade surplus with Canada. Yeah. That's crazy in itself to think, you know. So this subsidizing the entire nation of Canada is just untrue. I mean, we're selling cheap oil to you.
I know, and I was talking to this guy. I was talking to the guy, like, MAGA as they come, super great guy. We were having this really interesting conversation about all these issues, and you know, and he's like, "What has Canada ever done for us? We provide, like, basically he's saying the nuclear umbrella, like, we provide strategic defense and deterrence for Canada. What do they ever?" And I was like, "They sell you oil at a discount, like at a huge discount. Like, that's a big deal." And he's like, "Oh, yeah, I guess so. I guess that's you know, it's like there's such a strong relationship there, and it's so mutually beneficial. It really boggles the mind where this, like, what is the preferred outcome here, especially given that like all of this is happening under the trade agreement that he negotiated in the first term.
Yeah,
And
I mean,
that's a
one
good
of the
point there too.
things that really I look at is that I agree with you from the perspective of like what has become of our like, globalized economy, right? Doing something about that is smart. And then I also think that like one of the things that I did like about Trump's first administration was I did think he had a better approach to China than the people before him.
Mm-hmm.
That being said, like my biggest problem with the tariffs is not that they're tariffs. The problem is that we're not doing anything to stimulate manufacturing in this country. It's like we don't have capacity to replace whatever is getting tariffed generally. And that's the big problem. There's little areas where you're just like, okay, maybe cars, it would help. But, that's one of the few things we have manufacturing. But if you look at that, right, it's because we bailed out those car companies, not because those car companies are really all that viable and they still have those heavy, pension things. So it's just like what I would have loved to see is for them to come in, offer subsidies to build manufacturing in the country, and maybe a year out, then do the tariffs, or at least start, attaching some subsidies now or some incentives or things like that. But that is my big problem with the tariffs. Not just that they're tariffs, that it's just like, okay, we're going to throw up tariffs. And it's just like, well, if you don't have any manufacturing, tariffs don't actually help you, or you don't have, you have very little manufacturing infrastructure. And to your point, that's largely left this country.
Right, totally agree. And think about like just from a numbers perspective, how much of a dent can Canada make in U.S. employment? Canada's 10% the size of the U.S. It just can't take that many jobs versus China. And like the dramatically low cost manufacturing in other countries. It's not Canada that's coming in with like these crazy underpriced
Canada doesn't have low cost
manufacturing.
manufacturing.
No, and that's skirting environmental regulations and all that. Like it's just wild to me.
I think there's the underlying thing though. It goes back to the 51st state. Like I think there's a little bit of Trump mentality is conquest. Like the first thing he's doing is renaming the Gulf of Mexico, Gulf of America. We're going to go up to Greenland. Denmark doesn't have the rights to that. He's talking, about the Gaza Strip, talking about the Panama Canal. There's this, underlying conquest theme. And I think he loves the idea of saying, hey, we take all, with 51st state, Canada becoming, and all of North America is just the United States of America. He loves that idea of it.
Yeah.
So, I mean,
he likes putting his name on shit. Right?
Kind of, yeah. He likes his name on shit. You're right. Trump hotels, Trump airlines, Trump casinos. He likes his name on stuff. If he could, he'd rename it United States of Trump. If he could.
Yeah. I mean Greenland could be Trump land.
Trump land. That sounds pretty good.
It's like some desolate tundra. No, and it's funny enough, I like the idea of taking Greenland. I think that's a good idea. Like to me, but yeah, I think you could have handled it better to make it actually plausible. Like not make this big public stink about it. Just go to Denmark and be like, let's talk. Like, what do you want? What can we do here? Like that, strategically.
Can we buy Greenland from you as opposed to we're just going to go up there and take it from you?
Right. Like again, they're a staunch ally. You treat them that way. They've never done any. What's Denmark ever done? They gave us like delicious baked goods. What else? Sorry, I don't even know. Is it Danish?
That's the biggest question, right, about all of this, and I find myself wondering it all the time. Because as I'm talking about this economic policy, it's like when I learned economics, or when I feel like this was much more of a thing, you had a policy, right? And then you put some like projections around it, right? Where it's just like, okay, we're making these tariffs, but we think by, 2027, like this is how we'll benefit. And this is the extent that we'll benefit.
Right.
I haven't seen any economic projection around this. I just see, talk of them working eventually, right?
Yeah.
Which is not how economics works. And it just like makes me wonder, it's like, okay, like I do understand that maybe it will work. Maybe we'll get Greenland or Canada or whatever. But it's just like, I just have a hard time distinguishing between, what is, real policy and what is just like tactics to, ends that we don't really know.
Yeah.
Right.
Yeah.
And I think that's the tough part. You look at, some of the stuff like, the U.S. voting with Russia in the UN Security Council, and the way that that is really, affecting some of these relationships in Europe. And that's another thing where I'm just like, okay, is there a strategy here? Like, if so, like, what is it? Does anybody know? Like, does his cabinet know? Is this just something that he feels strongly about? Like, that makes it, when you don't know if it's like policy or if it's tactics, it's very hard, as someone that's trying to predict the markets, to understand. I think that's what we saw with the tariffs, where they're back, they're there. It's just like,
Absolutely.
Okay, how do I factor this in? Because if it's just like, okay, here are the tactics, here's the like plan around what's going on, and this is what we expect. It's much easier to be like, okay, I can plan around this.
That's right. And maybe you'd have more support if there was some strategy that was, put out there. And hey, talking about economic projections and uncertainty, the Fed met this week. They kept interest rates where they're at, which is probably different from the outcome that the meeting would have had, let's say, a few months ago, where cuts were far more cuts seemed to be on the table. And they put out their summary of economic projections. And there's a pretty big shift from pre-election forecasts. There's high uncertainty and unbalanced risks. That's how Claudia Sahm put it on Blue Sky. And she said nearly all Fed officials say uncertainty is higher than normal in the past 20 years. Risks are that GDP is down, unemployment's up, inflation is up. It feels like all of the pieces are in place for stagflation. And that is probably, from an economics perspective, one of the scariest potential outcomes here, right? That a lot of these policies and all this uncertainty are creating conditions that are both contractionary from a GDP perspective, as well as inflationary from a price perspective, right? Both tariffs and immigration policy are both things that are extremely inflationary. And then the uncertainty and the tariffs also mix in to reduce demand or pull forward demand. So far, what I've actually been surprised at is some of the economic numbers we're seeing are, like manufacturing and such, are still holding up to a certain extent. And I think a lot of that is actually just a pull forward. And it feels like the next two quarters, the second and third quarter, are going to be much uglier than what we're seeing this quarter.
I think the market's telling you that. The market's selling off, especially when it's limited, when it's very much US centric to the sell off. It's telling you, the market, for one, is uncertain. We've been talking, it's not only when you see the markets going like this and you see, uncertainty in the political front, the consumer sees this too. The consumer is not stupid. And I think what we're seeing, even with recent numbers, looking at some recent retailers that reported, Nike reporting last night, FedEx reporting last night. Yeah, the consumer is cautious here. It's a cautious consumer. So it's not a consumer that's out of money. It's not a consumer that's broke, but it's a consumer that is uncertain of the economic environment that they're going into, and they're saving their pennies here for a rainy day. It's why the airlines and the cruise lines are starting to sell off here now too, because people are looking, I'm going to go book this trip. I'm like, well, I don't know, because I don't know just what you said, Dave. I don't know that the next 2 quarters is going to look like. I don't know what the next year is going to look like. I just want to save a little bit of money right now just in case. So that is showing up in the economic, not so much in the economic data yet, but it's showing up in the quarterly earnings here. And that eventually is going to start showing up in the economic data as well. So I'm with you. The uncertainty here, going forward from, we could call it, maybe it's from Trump, maybe it's from, policy, but it also was kind of a perfect storm, because we kind of started the year where everybody was rah, growth stocks, spending like crazy on AI, this is going to be, everybody's excited about the possibility of a huge expansion in 2025, technological expansion. And now all of a sudden, just suddenly, you know, a little bit of a rug pull here. And that's made the consumer cautious. It's made the investor cautious. And that's why we've had a sell-off in the S&P of 7%, the NASDAQ 13%, because the investor and the consumer are both cautious here.
Yeah, I think it's a very interesting time in terms of, oh God, I'll be right back. This thing has been happening with my camera. I gotta
And he's gone. All right. While we
lose
wait for
George?
George, yeah, I think we're going to lose George. He'll be back. Some technical
Okay,
issues.
we lost George. That's okay. I'm still
happens
here.
on live, you know, whatever this is, not TV.
Yeah, for sure. So anyways, just going back, you know, I think what George was saying too, you know, when he started, you know, and again, just bringing it back to this, U.S. markets down 7% this year, but China up, you know, some 22% after today. It sold off a little bit. I mean, there isn't a lot of times where you see, you know, markets, you know, and this is year to date, where you see markets so strong in one pocket in Asia and so weak over here. Usually, you know, we go look at the global financial crisis and look at all that. And obviously, you know, the markets kind of tend to move together. We're kind of like a world economy where we all kind of tend to have recessions, dips together, troughs together, expansions together. I mean, that is not what we were seeing. George, I was just, you know, why we lost you there. I was just kind of expanding on what you were saying about China being up 22% right now and the US being down 7% year to date. And just saying this is not normal for markets to do this. It's not normal to see such strength in Europe and such strength in Asia and such weakness in North America. I mean, it's actually quite surprising. And I think it's twofold. I think one is international valuations are somewhat cheaper than the US. So if you get to a point where people start caring about valuation, Asian markets are pretty cheap. You know, a lot of China stocks trade 10, 12 times earnings. European markets are a little bit cheaper. US markets, you know, at 22, 23 times earnings are a little bit expensive. But then also the cautiousness of the international investors saying, well, I don't know the uncertainty in the U.S. political situation, so maybe I'm just going to invest a little bit elsewhere. So maybe pulling some money out of the U.S. and putting money elsewhere. That's probably been the contributor to why we've seen such a strong first 3 months out of China.
Yeah, I mean, I think those dollars are leaving. And what I was going to say is that, you know, tracking the options data through this, I think, you know, we saw on February 9th a very interesting thing where we actually thought there was a bug in our code because we couldn't generate metrics for some of our, like, you know, upside downside thing that are expirations generally longer than 9 months. And we had basically, I think it was something like 15% or like 60 names of our large cap stocks just fell off, no longer had expirations longer than 9 months. And I had never seen that. So that was my first sign on February 9th that something was up. Then by the time we wrote like we wrote a newsletter about us being bearish for the first time in a while on the 19th. And that was because our SPY net option sentiment was at 0. And it's still at 0. And that's the thing that I've never seen, you know, and I wanted to give both of those events of the lack of, you know, first, you know, institutions, I think, being concerned enough to stop issuing long-term options either way is very interesting. And I think what I think is they knew the tariffs were coming, right? And they said, you know, I think they were just like, we don't know exactly what's going to happen, but we don't want to take on any risk, right? And then with SPY net option sentiment being at 0, like I've seen it like for other like bear periods. I've seen it like sit there for a little bit, but then come back. But we're going at a month of it just being fixed on 0. And the only way for me to interpret that is people expect it to go down a lot further. I do think what we're seeing is some aggressive swing trading in institutions, because I think the markets have fundamentally changed. There's still a lot of retail money in there. And what I've found in like talking to some institutions, things like that, is that that's a pretty easy trade for them. If they see basically, you know, a certain like amount of optimism in retail traders and certain names that they do, it's easy for them to like kind of ride them up and push them down again. So I expect to see that kind of behavior. But yeah, I think we're in a time like we were talking about consumer confidence, and I think that is, important. But I think institutional confidence being low is one of the things that's driving the low consumer confidence. And I don't see that changing anytime soon.
Yeah, I mean, I think if you're an institution here and you've been sitting on some pretty incredible gains, right, coming into this year, right?
Yes.
Especially following November, the Trump trade, the massive rally, and it's been quite a while since we've seen anything that looks like a correction, and now it's like a perfect storm of problems coming together, and we're seeing the results of that, and you're seeing it really intensely in obviously like some of the biggest stocks and the biggest gainers. So I think that's the perfect time to segue to our favorite stock to talk about, Tesla. And Dennis, I'll give you the chance. I'll admit I haven't been following,
Yeah.
your comments on it. So the last time we spoke in January, you were a huge fan.
Oh, I was.
Major investor.
Yeah.
And obviously we've seen it get cut in half.
Yeah.
At this point.
Yeah.
I was pretty proud of my Tesla puts, as some of my friends have gotten sick of hearing about. But I emailed George last week and asking him about his, what's the options market telling him on it, and I ended up closing the trade, and that was a pretty nice trade, I gotta say. But so Dennis, where are you at with Tesla?
So interesting enough, and I had an inflection point well before Dan Ives had his 3 days ago. And so I had Tesla at one point in time.
Nice, like that.
Oh, and well before, last year, if you were listening to me 2024, I was rah Elon Musk, rah Tesla.
We've got the tape.
When Trump got elected, I was like, this is just the best thing for Trump, for Tesla. It's going to be, easier regulation to get FSD through and everything. But what started changing was, when he's bringing chainsaws into the White House and cutting government jobs and Nazi symbols over in Germany. And I'm like, holy cow. So on Pre-Market Prep, which is my daily morning show, I'm trying to find the date of it because I tweeted that day. So I was just looking through my old tweets and there's quite a few of them there. I think it was like late January that I said, look, I love the long-term prospects of Tesla. I think they're working on the real AI stuff, the really cool stuff that, everybody is going to eventually want to have, full self-driving cars, humanoids taking out her garbage and walking her dog and doing her dishes and vacuuming her homes. I love all that aspect of it. But the issue was, I'm like, I've never seen the hate towards, somebody turn so quickly. Like this Elon Musk, it is like pockets of hate, like people absolutely hating it. It started, really at the beginning of January. And I looked at it for a bit. And then the European sales numbers started coming out. I was like, this is a red flag, man. Down 58% year over year. And the Tesla bulls are on there talking about, oh, well, it's model refresh. The Y is not out. They're just not buying. That was an excuse because the obvious trade was telling us very clearly that the customer was pissed off at the CEO. And I've never seen, such a politically one-sided CEO before. CEOs, when you run a public company, and this is going to go down in history books as a lesson, you try to stay relatively neutral. Because let's be honest, 51% Republican, 49% Democrat, you can't cut off half of your customer base. So you can't go actively and piss off half of your customer base. And that's kind of what he did. He's pissed off all the Dems. But then it went further, to his tweet that Canada is not a real country, to his tweet, to his tweets all the time. So he's just pissed off so many people.
And his intervention, you were talking about Germany and the Berlin Gigafactory, and then his intervention or attempted intervention in the German elections. I mean, it's like, it's just wild. It feels like a total disregard for his company in terms of like his public stances and how energetically he's been doing this in a surprising way. I mean, like Tesla is such a fundamental part of his wealth and his what I know.
And it's his baby.
What he said, his legacy, right? Exactly.
Yeah, it's his baby. So it was really, I know about when I said it because it was $390 that day. The stock was
Okay.
$390, and I came on pre-market prep and I said, I know I've been bullish Tesla for a long time, but I'm like, I have to sell the majority of my position here because I don't know how much brand damage he's doing. That was what my whole thing was, and you can go back and I think it was, I'm thinking it was actually the first week of February.
Yeah,
And
I
I'm
think
like,
that was
you know
right
what?
around the same time. I was looking at the exact same thing. I saw the same. Those European numbers were eye-opening to me,
God.
and really said there is something here that is going to hit Tesla's fundamentals. And there's for me that was a trade to be had. But yeah,
And I was still long it at that time. So when you were
yeah,
identifying, getting ready to get short, I'm like, I need to not have this 10% of my long-term portfolio.
yeah,
So I sold 95% of my position. It was over a double for me. I had averaged in at 190, and I sold some at 410. I sold some at 390. I sold some at 355.
okay,
And then I was all out.
yeah.
Well, it's actually not true. I kept a small legacy position that I still have an account. So I have about 5% of my original position, which I just like, what, I'm forever playing with the house's money. And what if I'm wrong and, eventually goes back up. So I put it in my RSP retirement account. I'm like, never going to look at it again type deal. But I'll tell you, the brand, I can't think of a situation where a CEO has killed, has basically, done that much brand damage in such a short period of time. Yeah. For years, Tesla didn't even have to advertise because it was the cars were a walking advertisement. Everybody loved their cars. They would just talk about them. So they didn't even need to advertise. They didn't even have showrooms. I mean, this is how they made so much money, so much margin, so much better than the other auto companies because they didn't have to spend on a lot of traditional stuff because everybody was just hardcore believers. Built that brand, for 7-8 years there. That's all in 6 weeks, just destroying his brand. And I've never seen that before. And that's why I think at this point in time, people are asking, are you going to rebuy your Tesla? Rebuy your Tesla? And I'm like, I'll day trade Tesla. But at this point in time, I can't go back all in because I don't know how much of this brand damage is sticky. I don't know if any of it's permanent. Some of it could be permanent. And that's a serious problem. So that's where I'm at in Tesla, is that I just can't bring myself to get back in, even though I like the long-term prospects. There's been a lot of brand damage here, and that's going to take time to heal, if it ever does.
What do you think, George? What is the options market saying right now?
Yeah, it's very soft for Tesla. I mean, Tesla typically has one of the best net option sentiments. And actually, people seem to still like it long term. I mean, it's looking pretty good. And I mean, I do think it could be due for a rebound here. But I completely agree with what you both are saying. I got out of my last position. Well, I have one open in my larger portfolio, but I got out of my last one in my high conviction portfolio at 342, I think. But I think this is not just for the markets, one of the most fascinating things that I can remember in history. And, I can remember going through this live. And when I first started to talk about the alignment with Trump, I said, pretty much what Dennis said, which is I've never seen someone align so strongly with one party. And where it started to slip from me, I would say the first red flag was, even as I was starting to say, holy shit, this might pay off for him. He's aligning with Trump. He's going to have a big role. I'm sure he's going to get things in this administration for it. But the first thing is I remember I was listening to a space and I remember hearing Trump talk about how, it was important, very specifically, I think wanted to put him on the spot about, oil being necessary and needing to stimulate the economy in that way. And he got on and said, one of the more shocking things I've ever said, because this is the guy that's has such little faith with climate change that everyone needs to buy cars. And by the way, we need to go to space because it might be too late for us. And I heard this same
We need
guy,
to be a multi-planetary species. How many times has he said that, right?
Yeah.
Probably
I heard the same guy say that we had to balance short-term economic concerns with the climate, around oil. And I was like, holy shit. And that was the first thing where I'm just maybe this guy doesn't have a plan. But as it started happening again, I kind of tilted the other way. And then, it's there's the fine line between, genius and insanity. And, and looking back and saying like, oh, that X acquisition was smart to help him align with Trump and, kind of buddy up to him and, all of it. And now I'm looking at all of it like very differently. As I saw someone last night buying $1 million worth of, I think they're 175 or 180 puts expiring April 17th. And I'm just like, and also like putting all of this in perspective, I've heard that like at $100 a share for Tesla, X is at risk of being grabbed by the banks that have financed and the people that put it up. And I'm just like, wow, this is actually in range of blowing up. And like the thing, like I think in February, so Chinese sales were down 49%. And BYD up 161, and the number for Germany was 74% down, I think, for February. And the shocking thing where I'm just like, wow, this might all really like blow up is 94% of Germans said they would never buy a Tesla. And I'm just thinking about it's like, it's unprecedented to piss off 94% of a country.
That's impressive.
I think even Hitler at the end had a higher approval rating. I
bet you would find the same if you polled Canada. I bet you'd find the same if you polled.
They're throwing bricks through the windshield.
Yeah.
I talked to my neighbor, and he doesn't even have a problem with Musk. And I was like, "Would you buy a Tesla?" He's like, "No, I don't want a brick through my windshield." I'm like, "There's a fear of like owning the cars right now."
And it doesn't even matter your politics. Like you might think that Musk is a genius, and you're as big of a Trump fan as you can be. It's just like, as I think you're both saying, like it just doesn't make sense as a CEO to do that to your company and to destroy shareholder value like that. Like there's, objectively, right?
Is like, I think what like is clear now, right? Even as you're like coming into January, he's got this big position, everything. You could be like, wow, he orchestrated this perfectly. You could easily make that argument. But now where it's all at, like it's getting to a point where like the board, a lot of them have sold shares. Even his brother sold
a lot of shares. Yep.
Like it's looking like he might, like, at least it's a conversation, get removed, right? Because like
it's possible.
Even if you love them as an AI company, like one of the risks and one of the ways I'm like, game theorying it is it's just like one of my reservations, and I loved full self-driving long term, but one of my reservations about it was like, I think there might be more accidents in Teslas because, quite frankly, the hardware isn't as comprehensive as like Waymo's, for example. That's some might call it overkill, but it's not overkill if you don't want to kill any people.
For the stage that the technology is at right now, it is very much not overkill, and you're still seeing reports of how the FSD disengages at the last minute when there's going to be a problem, which juices its safety record. I don't know if you saw like the Cybertruck recalls. They haven't.
Well, the side panels falling off.
Side panels
that doesn't sound
off.
good.
That's right. That's not an FSD issue, but it is a mass manufacturing issue, and it goes to the heart of this issue, which is it is really hard to mass manufacture cars. Just as a general issue, that's a really difficult thing to do, and to do it safely, to make safe cars, it's something that even like the biggest car manufacturers in the world still struggle with. And you definitely see that you have Tesla here pushing a technology that is not quite ready for prime time. People are using it. The regulator has been all over them for a long time, but now, like, what's NHTSA going to do, right, against an Elon Musk company? It's very concerning. You're seeing like contracts go to Elon Musk companies, and people see that, right? Like this isn't something that I think the general public isn't aware of. I think people see it and they understand it, and a lot of people don't like that kind of thing.
Well, Trump, said yesterday that if you do damage to a Tesla car, you can get 20 years in prison.
Yeah, he wants to prosecute people as terrorists.
Yeah, terrorists for throwing a brick through a Tesla windshield. You're a terrorist, 20 years in prison. I mean, what country are we in?
You see a lot of the things going on with the supposed paragons of free speech, deporting people because of speech. And it's, there's a lot disturbing, and this isn't a political show. No need to get into it. I don't care what you believe or what side you're on, but it has an impact on markets, right? Like that's the point. is that seeing the impact of all of these policies. Even if you think that it's a policy that doesn't impact the stock market, it does. When when you start detaining people from Canada or the UK or Germany when they come into your country on a valid visa, and suddenly these countries, I think the UK and Germany both issued travel warnings to not go to the US,
It's
that affects your
insane. I've
markets. It
never
affects
heard
markets.
of that.
It's wild. And the US does depend on tourism. The US does depend on exports to other countries. And now you're dampening that. You're dampening demand. I can tell you, like here in Canada, it has been a very grassroots movement. It hasn't been organized at all to not buy anything from America. I'm sure you've seen the same thing, Dennis, right? Like
Everywhere,
every
yeah.
store,
People are like
all
looking
labeled
Canadian flags on everything in the grocery
everywhere.
store that's
Yeah.
Canadian. And if you don't
Yeah.
have a Canadian flag on it, they're trying
We're
to and I get it. When your country's under attack and you're being talked of as the 51st state, you back, the nice Canadian into the corner and, say, put the gun to their head. There's gonna be some, there's going to be some repercussions
they're
and the
still going to
consumer's voicing their
apologize, but
opinion.
they're going to stop buying your stuff.
Yeah, we're still going to apologize for it. We're sorry we have to do this, but we have to do this. We have to buy Canadian.
I mean, I think that's the big thing as I look at it for Tesla now, where it's just like the way I thought of the old Elon Musk. I would say like he could have powered through whatever issues there were with FSD, killing a few people, whatever. Yeah. But like his public standing right now, I just like looking at that product, right? And even if you love the Tesla bot, like looking at that product, like people not being able to buy it. Like if you think of about his approval rating in America, right? Mm-hmm. Like 60% against right now. And that 60%, I think you alluded to, Dave, like those are more of the people that are buying robots and, self-driving car, like, or electric cars, let's say. Yep. Like conservatives are not the target market for electric cars because genuinely they don't believe that there's a need for them. Yep. Yep, so you're talking about alienating a core market. So that's the problem. As much as I might still say, like he could build a quality, like he could figure out the machine learning on the FSD eventually, right? Mm-hmm. Yeah. Work out the kinks in the training and everything like that, and say like he might bring the best, most affordable robot to market. It's just like, what is the public's relationship going to be with that? And right now, it doesn't look good. It doesn't look like it's going to get any better than this. Kind of like we were talking about with the tariffs, it's like, is there a plan? Like, what's
exactly.
The plan?
That's
like, how's it getting to the other side of this?
Yeah, and then you couple that again, and it's not just about politics; it's also about competition, right? Like Tesla is getting out competed now by other companies. BYD being being the big one. They're making cheaper, way cheaper cars. They're innovating on battery technology way more than anyone else, and that's like. That is, to me, that is fundamentally disturbing. Back to like the original point, that was made earlier about DeepSeek as emblematic of this shift in innovative potential, where the U.S. has always, even if it's not a leader in manufacturing and how economically devastating the loss of that position has been over the decades, it has still led the way in innovation, and now we're losing that. In tech, we're going to be losing it in biomedical research, by what's going on with government funding of medical research, which I find extremely sad and disturbing. And we're going to be, as a country, not welcoming the best and brightest from around the world, or not be, won't be a destination for them, and they're going to go other places. So it's the U.S. is at a really, I think, pivotal time here. And, I don't think anything is sort of irreparable just yet. And I do think there's always the potential that there are long run benefits to some of these policies that there's going to be short term pain. But I don't know. I think you're both right. Like, what is the strategy? What is the end goal here for some of these things that seem completely unnecessary?
And again, it just brings it back to the markets. I mean, that's why, you know, we aren't holding rallies. That's why there's uncertainty. That's why the international investor is maybe moving their money to China right now or moving their money to Europe because there's less uncertainty there. So until, you know, we get that defined strategy and here's the plan, here's what we're going to have. But he's just kind of coming in and tearing everything apart and just thinking it's going to fix itself. I mean, when you tear everything apart, somebody's got to fix it. So there's jobs. Like when you start cutting all these government jobs, this has repercussions as well. I mean, we can't just go in and say, okay, yeah, we're going to fire 6,000 IRS agents. We're going to do this. This has repercussions that show up in the economy. I mean, it's interesting and somewhat scary as a U.S. investor.
Yeah. I wrote like one of my favorite letters when we went bearish. And it was after a Friday that was like February 18th was the market, or 17th, because I think I wrote the 19th on a Sunday. And the article was called "Don't F with Our Money." And it was because on that Friday, I was like, what's going on? It was like a Friday. I was like, what the hell's going on in the market today? It was just like tanking, right? And I was like, normally I can find a reason. And on that day, I couldn't find a reason. And then I guess it was like on 2:33 that Steve Cohen, who rarely talks, basically came out and said, I'm bearish now. And what reminded me of that was what you said, Dennis, where he was just like, he was basically like, you know, if you're cutting $2 trillion from the economy, like basically like that's not good for the economy. He's like, I'm predicting a recession. It was just like, it was like when he does talk, he's always very understated and there's like all this stuff beneath the surface. But, you know, when Steve Cohen's coming out and saying that on a Friday afternoon where the markets, I was just like, you know what? This is Wall Street saying, don't F with our money, right? These tariffs are going back and forth. And, you know, they're selling off and sending a message. And then kind of like, you know, who you might call the mayor of Wall Street kind of comes out and is just like, this isn't good. And I'm like taking the market now. And I think basically he was saying something to the effect of like, look, you can move it up and down and that might be fun for you. But if you don't pick a direction, we're going to pick one and it's going to be down.
Like, I think that's right. You know, it's this like we've talked about, it's this uncertainty. We haven't even talked about this whole reciprocal tariff thing, right? Like
April 2nd.
I like to call them
April
tariffs.
2nd, the largest tariffs supposedly in like U.S. history are about to hit, and nobody knows what they're going to be, who they're going to be against, you know, and I don't care how you feel about the policy. You might think this is the greatest policy imaginable. You might think this is the complete rebalancing of global trade imbalances, and that's a good thing. And I agree. Like that is a worthwhile aim. That is a valid idea, and even potentially a reasonable way to achieve that. However, how can you not tell people what's coming? Businesses can't plan for it, right? They don't know what to do. That level of uncertainty just leads to pullback. It leads to the consumer pulling back on spending. It leads to businesses pulling back on spending. They're waiting to see what's going to happen. And again, shouldn't be necessary. Should be something clear and easily communicated. Here are the tariffs that are coming. Or on April 2nd, we're going to announce what's happening, and we're going to put these in place over the next 12 to 18 months, and they are going to correct these systemic and structural imbalances. Great, good. That's one way to do something, you know, but like what are the, you know, the idea that they're going to hit, and that's when you're going to find out about them. It just seems so economically unsound.
Yeah, and I think the historical precedent is, as I like think about this, is like it feels like, you know, you could do whatever to the commoners, but it feels like he's pissing off the nobles now. Like, and you know, there's no more traditional warfare. They're not going to get their knights and march on the castle. You know, that wouldn't go very well for the nobles. But like economic warfare is, you know, kind of what's happening here, and I feel like that's why I'm so bearish on the market, because I see him pissing off the nobles. And the nobles are just going to be like, okay, you're going to do this. We know you care about the markets. We can make money shorting the markets. It doesn't matter to us. We want to be in control. And if you're going to be like controlling it up and down, like that's how we're going to wrestle control. And like, you know, it's kind of funny because me and you, Dave, are kind of probably aligned on the idea that Wall Street probably has too much influence, right?
For sure. Absolutely.
But I think we're seeing kind of the other side where he had, like, it doesn't seem like Trump is working with Wall Street at all on this. And that has consequences. It's not everyday people who you might be able to convince and sell and tell them you're giving something that them they're good when they're not. So I think that's the big reason where it's just like, whether they be reciprocal, infinite tariffs, or like anything here, I don't see Trump starting to care about the markets and what Wall Street thinks all of a sudden. And I don't see them budging either. I don't see them saying like, oh, we're going to support the markets more, even though you're doing this. So that is what I think is painting such a dark picture.
I think that's been one of the most surprising parts of all this to me, because of the first term, he really cared about the markets, and he would float ideas out there. The market would react, and he would adjust based on that. It doesn't seem like there's any consideration.
Trump put gone. That's the question that people are asking. You know, when he was threatening tariffs back in January, and he was giving us his playbook. People would say, well, if the markets go down too much, we lost George again. Maybe that hard stop at 1 o'clock or 2 o'clock.
Oh no, George.
But when the markets, you know, would go down, like you said in the first term, he'd say something to bring them back up. He seemed to care, you know, what was going on. So you had that Trump put in place, where if the markets went down too much, he'd say something he'd back off. He'd say something to bring the markets back up. He's giving no indication that he's going to do that this time. He's even said, oh, it's not down very much. If the markets fall 20 to 30%, does he change his tune? Maybe. But at what price is that Trump put? Because it's not when the market's down 7%. There's no Trump put here at all. Maybe if the S&Ps lose another 10% from here, then maybe he starts backing down on some of this stuff. But I think Wall Street had that comfort in February, thinking that even if tariffs come in, he'll back down once the markets start going down. And now that the markets have went down, he's not backing down. They're like, oh my gosh, we don't have a Trump put. You know, so now what? Now we need to like start thinking about this. So the biggest question is just, you know, at what price does the Trump put come back into play? It's not here. Maybe it's another 10% down. I think at a certain price it would be there. I think if the markets were falling 20, 30%, he'd be like, okay, we need to like do something about this. But at this point in time, the Trump put is clearly not at these levels.
I don't think he cares. Like,
maybe he doesn't.
Yeah, I think my suspicion, I should say, because there's not much to go off of, but you saw like Besant come out and say, you know, we're okay with the market dropping. There's going to be some short-term pain. You've seen Musk say short-term pain. You know, I think they all expect that that the next, I don't know, 2 quarters, let's call it, which is how it feels right now, is going to be rocky. And then the policies will have been put in place. They will start this rebalancing. It will lead to, you know, a lot of U.S. growth. That's the expectation. All the regulations slashed, size of government slashed. Yeah, that's going to come through in the economic numbers near term. But then, you know, they expect it to unleash a lot of growth, and then it's all okay. And so they're sort of willing to take the short-term pain, which, you know, if you have the outlook that they have, I think is a reasonable approach. But that being said, my concern is if it actually leads to stagflation, because if the market drops, they would expect interest rates to drop as well, right? And the problem is, by putting tariffs in like they are, they're maintaining this sticky level of inflation, which is going to handcuff the Fed. And that's what the Fed is indicating as well. They're like, this inflation expectations are on the rise. This is a concern. They're watching it. You know, Powell talked about that in the presser. They're going to try and disentangle non-tariff and tariff inflation. That's tough, but maybe they can do it. But even then, like, are they going to be willing to cut interest rates even if most of the inflation is from tariffs? I don't think so.
I don't think consumers care whether it's tariff or non-tariff inflation.
Yeah.
They don't want inflation.
Yeah, and we saw how horrible inflation was during Biden's term and what that did to people, and the idea that we're going to bring some of it back. I don't know. So to me, I think stagflation is the biggest concern macroeconomically, And I really hope we don't see it, but it can become a self-fulfilling cycle as the market drops, as economic activity slows, as the wealth effect, acts in the other way, and then you have prices continuing to go up from tariffs. All right, so I think we covered a lot. This was a fascinating conversation, guys.
Yeah.
I want to thank everyone. The viewership was really wild. We didn't have many of you until halfway through, and suddenly everything just shot up. But it's great to have had everyone join us. Make sure to check out Prospero.ai, George's awesome application for telling you what's going on in various stocks and in the market. Check out Dennis's new StockTraderNetwork.com. If you're a trader and you want to get some more insight and content into what's going on, come visit us at Irvin.finance, where you can connect with the companies that you invest in. And thanks for joining us on another great episode of Let's Talk Markets Live. We'll be back next week, and we're going to be talking with Mohit from a transfer agent, and we're going to get a really interesting perspective, I think, on the relationship between investors and the companies they invest in, and what it might look like when someone builds a new technology forward transfer agent. So thanks, guys. Again, really appreciate your time.